Hey guys, it's Richard Fetchko, the CEO and founder of Altfins again with lesson number 10. In this lesson, we'll talk about margin account trading, specifically what is a margin account, what's the difference between cross and isolated margin, demonstrating it on Binance, how to open and close out a margin position, what's short selling and when to use it. And primarily, I will focus on short selling. I think that margin accounts can be used for future trading, leverage trading, and short selling. I think short selling is the technique that more advanced traders should actually master to survive some bear markets as well. And we'll talk about the risk and benefits of margin trading and short selling as well. So what is a margin account? If you haven't already explored it on some of the exchanges that you may use, and this works, of course, in the traditional finance world as well. But normally, we trade in the spot market and without any leverage, without any margin. We buy, sell coins at whatever price we think is fair. For some of the traders looking for some additional leverage or opportunities to short sell, the margin account allows them that. And so essentially in the margin account, we're able to borrow additional funds to execute our trade with a leverage, to buy more or short sell, but buy more of the coins that we want to buy, even beyond our purchasing power. So even if we only have $1,000 with a margin account, we can buy $5,000 worth of Bitcoin, Ethereum, whatever the coin is. In some cases, the leverage potential is even higher. Of course, I would advise against that. In fact, I personally think that most of us, beginners or intermediate traders, should not use leverage. But margin accounts are also used for shorting, and I think there we have an opportunity to leverage the margin account for short selling, and that is a technique that I think is less risky than leverage trading, leverage buying. And so again, why would someone use a margin account is to increase their gains, but of course, potential losses as well, and it enables short selling. So let's talk about the risks of leverage trading. So if you're going to open up a margin account for the purpose of increasing your potential of gains, then you should also know all the potential downside, right? And some of you may already be familiar with this math, but let's go over the examples of why or how margin trading, or specifically leverage trading with a margin account, can help or hurt us. So normally without margin, let's just say we have $100. We have a coin that trades at $4, so we're able to buy 25 coins for $100, right? So I buy $100 worth of coins, assuming the price goes up from 4 to 5. I sell it at 5, therefore I'm selling at $125, and therefore I made a profit of $25, which on an initial $100 capital is a 25% gain. If the market goes against me, and once again I bought $100 worth of coins, that's unchanged, but this time the price goes to 3 from 4 to 3, so it goes down by 25%. I sell it at that level at $3, so I get $75 back, and that's a loss of $25 or 25% on my initial capital investment of $100. All right, so far pretty straightforward. If the price of the coin goes down 25%, I lose 25%. If the price of the coin goes up 25%, I gain 25%. No leverage. Now with margin, you could potentially leverage your position. Assuming a margin of 3 multiple, 3x, with the same $100, I'm now able to buy $300 worth of the coins. And if the price goes up from 4 to 5, my $25 gain, which I had in the spot or in the regular account, actually multiplies, right, by 3. So instead of $25, now I win and gain $75 with which means 75% gain or profit on my initial $100 equity in my account, right? So that's leverage. I just significantly increased my potential gains. However, that works the opposite way as well. So it's a margin or leverage trading is a double-edged sword. It increases and enhances gains and losses. So beware, right? With the same leverage of 3 times, again, nothing's changed here from here, which is that I buy $300 worth of the coins, but this time the price goes down 25% from 4 to 3, and I lose $75. So almost 75% of my initial investment has been wiped out. So that again is very simple illustration of how leverage can help you, but also hurt you. And again, I would advise against using leverage at all, frankly. But if you have to, then I think a 2 multiple or 2x leverage is the most that a trader should use, no matter what the conviction is in that particular position or trade. Now, in terms of short selling, which is my primary reason for using margin account, is to short sell. So there are times or there are situations when I think the price of an asset will go down and I can profit from that by short selling. While normally the natural way of thinking for traders or beginning traders is that I want to buy something that goes up and I sell it higher. With short selling, you do the opposite. I see an asset and I think there's a downward trend that will continue. So I think that I want to sell high and buy low. Normally it's buy low, sell high. But in the short selling example, I'm going to sell high first and then buy low. Now, of course, how can you sell something that you don't own? Well, you have to borrow it. And that is completely seamless on most exchanges, including Binance. They basically they lend you the asset that you want to short. So you can borrow that from them. There is a small fee that they charge for that. But again, it's completely seamless. But that's what happens behind the scenes, is that essentially you are borrowing the coins and then you're selling it in the market, and then you're going to buy it back when the price goes down, hopefully. Why would I use it? I use it to reduce my portfolio risk. So while at the outset it seems like, wow, short selling is risky, it can be risky if that's all we do. Because if I sell an asset that instead of going down goes up, then my losses obviously are potentially even unlimited for that position. Now there is the good part about margin account is that you can have a cross and isolated margin. And I'll explain that later. That will limit your losses. But again, the reason that I use short selling is not only or not primarily because I think that I can gain on that asset price declining, but really because I want to offset my risk in the long position. So let's just say I have 10 different long positions in 10 different coins. I'm owning it. I bought it. I'm very long, right? And if the market tanks, then I'm going to be losing a lot of money potentially. And so to offset that risk, especially like right now, as an example of we've had, we've reached some new all-time highs for Bitcoin, Ethereum, and now we've pulled back, and then we're at that iffy point where is this just a pullback correction, or will this be something more serious? So perhaps it's a good idea to put on some short positions, short sell positions, so that in case the market does tank, I can gain on those short sell positions that will offset my losses on my long positions. So you can almost create a market neutral strategy to where no matter what happens to the market in general, you're gonna be, net okay. And so you should, hopefully your long trades, if you pick them right, will still, in case the market goes up, your long trades, your buy positions will make more than you will lose on the short sell positions. So again, it's a way to, in some ways, hedge your market risk, hedge your volatility risk, hedge your portfolio at times when the uptrend is uncertain. It's there's increased volatility and uncertainty around whether we're, after making such massive gains we have in the last few months, there might be a correction, and I would use those short sell positions to kind of hedge that. And so what happens in terms of the math, we can go over the example that we have here. So I have $100. Again, I sell 25 coins at $4. And then if the price goes up, I'm losing money, right? I have to buy it back at a higher price. So I lost $25. Okay, but no leverage. I'm not using any leverage here. The margin account in this case simply allows me to short sell, to borrow coins and short sell them. I'm not using any leverage. And I'm down 25% in this case. So it's the opposite of basically going long. It's going short is, when you go short and the price goes up, you're losing money. Where you gain money, obviously profits when the price actually goes down. So in this case, in the second case here, once again, I short sell $100 worth of coin XYZ. The price goes down from 4 to 3. Therefore, I gain $25. When I close that position, I have to basically buy the coin for less money than I sold it for, and therefore I'm up 25%, or I gain $25 on that trade, right? And so let's believe in terms of just slides, that might be more or less all I had. And let's go ahead and look at some examples. So here I'm. So how do I look for coins that perhaps are suitable for short selling? Well, again, the playbook has to be completely flipped over, right? While when we go long, when we're buying coins, we want to buy coins that are in an uptrend, buying coins that perhaps have had a bullish momentum MACD breakout, or are in an uptrend and have had a pullback, or are in an uptrend but are oversold, right? All the trading strategies that we've gone over so far have focused on going long, buying coins that are in an uptrend, and then some, and then something else, right? Well, we completely have to flip that around, and it's kind of hard sometimes to think, okay, well, which coins are going down, because those are the coins that I want to short. I don't want to short those who have been in the uptrend. Okay, maybe the trend will reverse, but that's a tough bet, is to say, okay, the uptrend, the coins that's been going up, it's not going to reverse. I'd say more likely scenario is that the coins that have been going down will continue to go down. And if the market tanks, those coins will go down even faster. Okay, so one source of good trading ideas is the pattern section. So in this case, we're looking for signals, sell signals, right? We're not looking to buy, we're looking to sell. Okay, here we go. We've got several situations where the price is approaching support level, and the theory goes that it's likely to reach that support level. We could also say we want only breakouts if that's what we want, right? And I also want to make sure that these are available on Binance, so I'm going to sort further on Binance. All right, so I've got some breakouts here. Some are day old, some are fresh, but I don't really care about just breakouts and emerging. Both emerging and breakouts have this about the same level of success rate, so I'm fine with support level approaches as well. So I've got a lot of interesting opportunities now. The other thing that I need to make sure is that these coins are in a downtrend if I'm going to sell them and short sell them. So let's take a look at the first one, ACM. How do I check the trend? If I click on it, I have right on top, right, an indication, is this in a downtrend? It very much is on the short, medium, and the long-term basis. So this is a good candidate for shorting. Next one. This one only has very small profit potential, so I wouldn't bother with that, but it is in a downtrend. Filecoin, let's take a look at it. Also a relatively small profit potential, as you can see, about 4%, because most likely it's already approaching its support level, which is $50 indeed. So even though it is in a downtrend across the board, the profit potential is low. Let's look at some situations where the profit potential is at least 10%. ACM, we already covered. Here's another one, OGN. Okay. But this one may not be in a downtrend. I looked at it now. OGN is in an uptrend, so I wouldn't short it. No, I would not do that. CIS in an uptrend, BCH, mixed, that could be a candidate. Let's see, there's another one, Maker. That one's a mixed trend. I would probably venture to do this trade as well, although there might be some more obvious. Ethereum Classic, yeah, this is probably a better candidate. So we'd had ETC and AMC, right? So let's go to Binance, and normally you'd go to trade, right? Advanced, we can do that. This is where you would trade in the spot market, buy, sell, so on. In the margin, you can go again back to the trade and click on margin. This takes you to the margin. The trading terminal looks the same, but now it shows us what level of leverage you have potentially if you wanted to trade leverage. For example, right here, I go to the search box here, but here on the top you have ADA versus ETH and a 5x. Well, the 5x is telling us that you could leverage that position. If you were going to go long or even short, you could leverage it 5 times. That's a lot. But we're not going to use leverage. We're really going to short, in the value of the assets or the collateral that we have. But one other thing I wanted to highlight is this cross versus isolated. Right here, you have 2 types of margin accounts, cross or isolated. And what that means is that with cross margin account, your position is collateralized with all of your portfolio. So if a particular position goes against you, it will not liquidate you until all of your collateral is used up. While the isolated margin account, which is the one that I suggest you use, limits your margin account and collateral to that one position that you create. So if let's go ahead and look at ACM, right? Oh, wait a minute. Okay. Well, that's the other thing, is even though ACM is on Binance, it's not available for margin trading. Well. The other one was ETC, Ethereum Classic. Okay, this one is. So if I want to short sell Ethereum, and I'm going to do it Ethereum versus USDT. Okay, I'll click on it. Now, if I short sell, let's say $1,000 worth of ETC, then in an isolated margin account, only that $1,000 or $1,000 or 1,000 USDT is at risk. The rest of my portfolio, which I think is about 17,000, is not at risk from this position. So if I short sell it, and for some mad reason, Ethereum Classic goes to 500 from 40, and I don't close it in time, then only that $1,000 is at risk. I may get liquidated, but only the $1,000 will get liquidated, right? In a very sort of extreme case, and you gotta think of those extreme cases. You don't want to expose your entire portfolio to some extreme one position. So that's why isolated is the way to go, because you isolate the risk, you isolate the position to just that collateral that you commit to that margin account for this particular trade. So what I'm going to do is say, okay, I need to, so I want to be in an isolated margin account. Now, first, I have to transfer some money from my funds into this isolated margin account that I will use just for this particular trade or this particular asset. So I'll click on transfer from fiat, right, in the spot account into isolated margin account. The trading pair is Ethereum Classic versus USDT. I don't have any Ethereum Classic, so I cannot transfer that in there. But what I do have is USDT, and I have just over $1,000 worth. So I'm going to put $1,000, okay, for my let's see. I've been playing around with this. All right, let's try again. So $1,000 that I want to transfer into that account. All right, it's in there. Now, so I want to short this puppy, right? All right, let's go ahead. So the pattern here states that, you know, we're going to go down to, let's see what the text here says, likely to move towards the support level of $42 or so. So we're now at 48, so that will be another 12% downside. So let's go ahead and do that. So we want to short sell. So we're going to sell here, and we're going to borrow because we don't have this asset. So we're going to borrow Ethereum. How much of it? $1,000 worth. So that's about 20.67 Ethereum that we're going to borrow and sell at price. Let's see, I mean, we can do it pretty much at market, but let's just say it's 47, minimum of 47.80. Okay, So no leverage, guys. I'm just selling it for the $1,000. Let's do that again. $1,000 worth of dollars. So I'm not going with any leverage and so on. Just what my money affords me. Let's see, did that go through? Yes, you did. Right here on the bottom, now we can see that I have a position. And we can also go to, we can also go to the wallet here. Make sure you're on isolated. Refresh this page. Get rid of this. All right, so this is our position right now. I borrowed 20.92 Ethereum Classic. There is some interest that I'm incurring, right? And this is your profit and loss. And that's it. I'm going to let this position on for a little bit. What are other ways to find some short trading ideas? Well, we can go through the screener as well and basically reverse the logic of the screeners that we used for long trades. So what am I looking for? Well, I'm looking for coins that are in a downtrend. Down, short term, down, medium term, whoops, and long term. Well, that gives me about 379 items. Let's do a market cap minimum. The market cap minimum is also good because there are a lot of coins out there that are just derivative coins of other coins. So like 2 times short Cardano, 3 times short Cardano. Okay, I'll show you that. Let's go ahead and do this. I'll open up a new tab just to see, for you to see to what I'm talking about. So if I go to Cardano, for example, right? So you can see there are other coins like ADA up, ADA down, ADA 3S, ADA 3L. So these are basically derivative coins essentially that multiply the or leverage coins that multiply the gains or losses. So this is ADA 3S is basically 3 short with three times short ADA for each coin. So I don't want these in the results. And as you can see, those don't have a market cap, right? So by putting in some level of minimum market cap, I eliminate these coins from my search results. So going back to our screener here, I have basically these are coins in a downtrend. I could add to that to say, all right, but I don't want those that are oversold. So I don't want those that are under 30 or RSI 14 should be over 30 because those could be situations where, yeah, it's declining, but maybe there's a bounce coming up. I want those that aren't necessarily oversold. So now I'm down to these right here. You know, I could also say, okay, but I don't want those that have already declined, you know, a particular, let's just say last week, let's say the performance is better than minus 10%. So they're down, but not worse than 10% in the last week. Okay, so they haven't declined too much, and these could be our, you know, potential trades here. Of course, then you got to analyze a bit. Where is it in relationship to the potential support, resistance? Like this guy compound, it's sitting right at the $300 support. So I wouldn't be shorting it right here until it actually breaks it. So I would probably set up an alert to alert me that it's broken through that support, because the next support level is 200, right? But it's not quite broken there, but it is in a solid downtrend. I mean, all of these will be in a downtrend because that's part of our filter. The next one here, decree, right? In a downtrend, you can look at sort of a bigger picture here to see that downtrend, but it's also sitting at that 100 or close to that 100 support level, which has held several times in the past. So I'm not going to bet that it's not going to hold this time. So it's not quite there yet, right? You're in finance. This is a very well-known DeFi name. In a downtrend under the 200-day moving average, and really the closest sort of substantial support level, I suppose 30,000 or lower, maybe 25 or 27,000. Yeah, but again, a little too close to that support level of 30,000. So, you know, it takes time to find the right Celsius here. We've had a few days of down market, and I'd say that in many cases we are oversold. But look at this down chart. It's like textbook down chart, right? While in an uptrend is characterized by higher highs and higher lows. Well, downtrend is characterized by lower highs and lower lows. Okay, there was an exception here, but again, lower high. Each swing had a lower high, and now we're making lower lows again and lower high. Ouch. So now this one would probably be ideal to short when you have a bounce. Chances are that it will resume its downtrend. Let's look at another one. This one is in a downtrend across the board, as you can see on top here. Maybe a bigger picture also helps see that. Right. And I'd say it could very well revisit in a downtrend $2. Oh, by the way, let's add another thing to my filter. Make sure that we have coins that are trading on Binance. So I add Binance to my filter. Okay, reduces it quite considerably. And this coin is still on the, oops, sorry about that. Lisk is still on that list, so that hasn't changed. Okay. So here my bet would be that if it bounces back to that moving average, 200-day moving average, that's been a resistance lately, that it would probably sell off again, right? But some of the short selling, honestly, the timing is oftentimes better when the market has really made some strong gains, and some of these shit coins downtrending coins have bounced up, and that's you know, a better time in terms of the market short sell, because obviously in the last couple of days we've had already significant down days. So looking and finding something that hasn't moved already is more difficult. But since we are primarily concerned with hedging our long positions, we can sort of be still selective, but not as selective. Let's see, there's some questions. Can you cancel or buy back the position at any time in short selling? Yeah, and of course, you can also place stop losses in short selling. Great question, and I will happily demonstrate that. So here we are. Back to our trading terminal. And the price has gone up a bit since we shorted it, so we're losing some money. We can refresh that here. Still asking me to. Okay, so we're, as you can see, we're down now, about $16, right? So yeah, I could totally put a stop limit, right? And I would put a stop limit. Let's just say if it goes to $60, I want to close out. So the stop trigger would be $60. My stop limit order will be 61. And I want to use all of the entire position, which is 20.92 or so. Right. So that's my stop limit order. And it says here, if the last price rises to or above $60, then it will place an order to buy 20.9 Ethereum Classic at the worst price of 61. All right, so that limit order is now in place. So that's kind of your stop loss order in this case. To close out, you can essentially just buy back the same amount. So we can do that, or you can click on just one click and it'll basically close out everything. I'm trying to think which way I should demonstrate, but I can just demonstrate it this way perhaps. Okay, so it's let's see what's now in our isolated margin account. All right, so wait a minute. It might be because of our stop loss order. We may have to cancel that first. Right. So, oops. I clicked on it. I meant to just cancel it. So back to margin orders. Isolate it. Cancel that. Okay. In fact, now let's go back to our isolated margin account. And we can initiate the closing of the position even from this screen by using the one-click liquidation right here. Okay, request approved. And so now, as you can see, my balances have changed and I don't have anything borrowed anymore. I have some dust actually left over that I own. Very small amount. It happens. And I'll show you how to get rid of that. But I have borrowed now nothing. So we've closed that position, you know, lost about $16 on that trade. And now what we need to do is transfer money back from the margin account back to my fiat account, right? If we're down, I mean, if we want to continue trading this pair, I can leave it there. So here, I'm transferring money back. This time I only have about 975 and change. So again, that's the 16 and change dollars that I lost on this trade because it went against me. So I'm going to transfer that back to the spot account and also and then go back to the margin trading. And basically that position is gone. Okay. So that's how you would close that trade. I'm just checking if there's any other questions here. All right. Let's go back to our search for shorts. So this list here, yeah, we could short that. I mean, it probably would short it if it bounces back up. Let's see if there's anything interesting right now. Oh, I'd say that this is actually a breakout. Well, let me go back to that. Where was that? Oh, that was AVA. Okay. Right. So it looks like there was support level. Let's see if we can draw it here. Based on these prior support levels, say it's right here, around 260 to 70 that we've broken below that support level. I think very likely next stop will be $2. So let's go ahead and short that AVA just to demonstrate. Let's see if Binance actually allows us to margin. This coin looks like, no, it doesn't. AVA, here it is. AVA against BUSD. I don't have any BUSD, do I? Let's see if I have any BUSD on my account. So first, again, the steps are, I need to isolate margin. I need to transfer some BUSD. We're going to find out if I have any. Yeah, 0. All right, so then I have to get some BUSD. All right, we can do that. Well, I could have borrowed, but we can do that right here. Well, let's get some BUSD. Okay, here we are. So I have USDT and I want BUSD. Here we go. Right, I mean, they're both stable coins, so there's not going to be much difference, but let's buy $1,000 worth at market price. All right, so we have 1,000 BUSD. Let's go back here and let's try this again. Transfer. I don't think it's refreshed it yet. Yeah, not yet. Let's see, do I have MBUSD? It looks like I do right here. Okay, should be able to trade. Trade margin. Let's find again AVA BUSD. Transfer money into my margin account from fiat into isolated margin. I want to transfer some BUSD. It's there now. So all of the 1,000 BUSD I transferred into the isolated margin account now. And now I can short, borrow, and how much? $1,000 worth. What price? $2.48 or so is the current price. So I'll adjust the price so that the order does go through. Okay, the order was filled, and we have a short positions in AVA. Okay. Question is, how would you combine a long with a short position? Would you set up a stop loss for both? Well, good question. No, I don't really have. I think you would approach it the same way we do long positions. So basically, you look at the short, entry. You look at, okay, where do you think, what do I think is my upside or my target, right? Some lower level. So in this case, if I go back here to this trade, wait, BUSD. Right, we think that it's broken through the support level, and support level is about here, and that now it's going to go down to the next support level is $2 or less, and that's my gain. But if I'm wrong and it bounces back, what's the next sort of resistance level? Well, the next resistance level I think is clearly $3. In part because it also lines up with the 200-day moving average. So that's kind of where I would put the stop loss. But you can also, look at your risk to reward ratio as well to keep that 2-to-1 ratio. So here my risk is from where I shorted it at $2.50 to $3. My risk is 50 cents, and my gain potential is a little more than 50 cents. So it's not actually quite 2-to-1 risk to reward ratio. But again, I'm doing this partly to offset sort of market risk that that the market tanks, that I'm going to make money on this one, and help me offset some of the losses from my long positions. But so no, I don't have a specific sort of long short conversion formulas or ratios. There are certainly some techniques to look at volatility of the assets on the long side and volatility of the assets on the downside to kind of calculate your delta, but that's that's way more complex. And then we have the space, that time to do that, to go through the exercise. But I think for the most part, if you if you more or less, it's up to you how much you want to have on the long side in terms of your portfolio. If you have $10,000 in long positions, then if you really want to be market neutral, then you should have $10,000 in the short positions. Or if you just want to be partially hedged, then you could have, only 5,000. So maybe half of the long positions, you'll have short positions, right? It's kind of up to you to see how much risk you want to, how much of the market risk you want to hedge. Now, of course, it's not free, right? It's not free in the sense that if the market does continue to go up, you're going to potentially lose some money on the shorts, because they could also participate in the market rally. Although the chances are that since they are already in a downtrend and have been in a downtrend, even in the market rally that we've had, right? This coin has been in a long-term downtrend for a while. So chances are that even if the market goes up, this particular coin is not going to participate in that rally very much. Certainly not as much as your longs that you picked that are in an uptrend, right? So, but it may, these short positions may sort of go against you and basically lose some money or reduce your profits on the long positions. I opened the margin trade, however, I can't close them. How do I close them? Is that question still open? Because I just demonstrated sort of the one-click close. I'm happy to do that again. So let's do that again. Although I would love to hold this position actually, but maybe I'll show you where to close it. So either in the trading terminal, you're in the margin trading tab right here. So I'll click on it again. It'll load up. And then I scroll down to my open positions. Oh, for some reason I don't see it here now. Okay, it might be easier if we actually go to the wallet margin. And make sure you click on the isolated tab to see your positions, and then trading positions, hide small balances. So here's my position that's active, and to close it, you can click on this link that says one-click liquidation and then confirm it. The other way would be to do it from the trading terminal by buying it. There's also a one-click liquidation option there, and you can just normally just buy it back, whatever you short sold. You only see trade option. All right. Maybe you can reach out to us via chat, and I can help you go through that. But so that really concludes my discussion of margin trading and short selling. Again, I do not advocate leverage trading and using margin accounts for increasing your leverage. If you're going to use margin accounts, certainly use isolated margin accounts and do lots of test trades. But again, I don't think that leverage trading is a bright idea, because sooner or later, I think you're going to start losing a lot of money. But I think using a margin trading for either futures without leverage or short selling is actually a very reasonable idea. Again, as long as you have it paired with some longs. Short selling, if we are in the bear market, and I've done that in the bear market, just pure short selling it, no long positions, But ideally, what you do is you have some long positions, and you just want to protect yourself a bit on the downside because there's some market uncertainty, because you don't like what you're seeing, how the market's behaving like it is right now, and it's unclear if it's just a normal correction or something more dangerous ahead of us. So having a few, opening a few short positions is, I think, reasonable to hedge yourself. But again, ideally you have that. The short positions are also spread out. Perhaps, if you have 10 longs, then you have 10 shorts or 5 shorts, but certainly not one big trade on either side. You still want to basically stick to that rule of having only 1 to 2% of your equity or your portfolio at risk. Great. So it's been a pleasure. This is lesson number 10, the last lesson. I do plan on holding still some refreshing webinars and focusing on the actual execution and less on the theory, although we've tried to do that throughout the course. And if you have some follow-up questions, help you need, we're out here to help you. So reach us on the chat line or email us at invest@alfins.com. Good luck, everyone. And thank you again for going through this education course and being part of our community. Have a great day.